Okay, so we have an example here. So assume the following hours of maintenance works and the total maintenance cost for the last 6 months. But remember that the high-low method can be used to analyze mixed cost only if the scatter plot or the graph reveals a linear relationship between the variables. So here, which means that if the hour of maintenance and the total cost do not follow the linear relationship, then this high-low method does not reveal you a correct answer or give you an erroneous result. Okay, let's go towards the next slide. So the high-low method, the example is, so how are we going to find out the variable cost? So the through high and low method, you need to find out the highest amount in the hours of maintenance. So what is the highest one? So you just find out the highest one, which is 800, and you minus it from the lowest one, this one. So the answer is 400. The same procedure is for here, the total maintenance cost. What is the highest cost here? Is 9,800, and what is the lowest one? 7,400. And the difference is high and low is 2,400. So what is the variable cost? Variable cost is the cost per hour of the maintenance. So cost divided by the hours, which comes from this high-low method, which is 6. So this 6 is variable cost per hour. And how we can segregate and find out the fixed cost in an mixed cost. So for example, this is the highest cost, 9,800. So which part belongs to the fixed cost and which part belongs to the variable cost? So we know that our equation is y is equal to a plus bx. Y is the total cost, a is the fixed cost, b is the variable cost per unit, and x is the number of activity. And if you find out a, then a is equal to y minus bx. Y minus bx. So in that case, just put the value. We have 9,800, and from 9,800 you have 6 into its activity is 850, and your answer is 4,700. Let's move further. You can also create the equation in which y is the total cost, and you can find out this equation. You can easily segregate, and you can find out the part of fixed cost or variable cost portion in every total maintenance cost. You can also make the equation as well. Okay, in order to check whether you understand or not, I have pasted one quick check. So I'm just ask you to pause the video and try to solve it by yourself and pick a relevant answer. Okay, I hope you already have done it, so let's do it together. So sales, salaries, commission are 10,000 when there are 80,000 units are sold, 14,000 when 120,000 units are sold. In that case, we have a high-low method to find out variable cost. What is the highest level of activity? We have 120,000 and we have 80,000. Sorry, we have 120,000, we have 80,000. Difference is 40,000. Whereas our cost is highest 14,000 and 10,000. Difference is 4,000. These are units, these are cost. And we can easily find out the variable cost. Variable cost is equal to cost over units. So we have cost 4,000, units are 40,000. So answer is $0.10 per hour. Answer is B. So if you want to find out the fixed portion on this one, so then just use the equation. We know that equation of mixed cost is equal to y is equal to a plus bx. So just to take one of the cost, for example, I take $14,000. In that case, we need to find out the fixed portion. So we just left it a here, and then we have the variable cost 0.10, and we have the activity 120,000. Just need to solve it. The answer would be 12,000 here, 14,000 here, and if you find out the a is equal to 14,000 minus 12,000, and answer would be A. Okay, now moving towards our learning objective 5, which is prepare income statements for purchasing company using traditional and contribution margin approach. So a contribution format approach of income statement, it allocates cost based on cost behaviors, while the traditional format approach, it is prescribed by law and it is used for external purposes. So a traditional approach organizes cost in a functional formats. Costs relating to production, administration, and sales are grouped together. So this is basically the production cost, this is selling and admin cost, they are grouped together, and then we find out the net operating income. Whereas the contribution format approach, it groups the expenses based on the behavior to find out the net operating income. So the uses of the contribution format approach is that it is primarily used by the management, and this is primarily used, traditional format approach is primarily used for external reporting purposes. So the contribution format approach is used by managers for an internal planning and decision making tools. So the decision making tools can be used in cost volume profit analysis, and we will learn in chapter 5 the budgeting, segmented reporting of profit analysis, and then special decisions such as pricing and make or buy decisions as well.